Okay, the trend is your friend. Now, how will you know if this is true? In the last video, we discussed what moving averages were. In this video, I'm going to show you how to use moving averages in different time periods to help you easily identify the market momentum. I'm going to actually show this to you on the charts. But before I do that, let me take a brief moment and explain and show you the charts. So in the bottom left corner here, you see ProRealTime.com. This is the charting service that I'm using. It is free for end-of-day data, so you can feel free to go to www.prorealtime.com and sign up for the free version. I don't get paid anything for that, but it's a great service and I use it daily. Now what you see I have here is the mini S&P 500 futures contract. And what this is the price action for that contract for the past few months. Now, some of you might be confused and think this is a candlestick chart because you see the green and the red bars, but it's not. It's a bar chart just with the colors put on each individual bar. ProRealTime allows you to do that, which is a pretty cool feature. So basically the green bar means today's close closed higher than yesterday's close. The red bar means today's closed lower than yesterday's closed. That's it. But it's just a simple bar chart. Again, you can check that out at prorealtime.com. Alright, now let's talk about the moving averages. We said before that we wanted to use the moving averages because they easily help us figure out the market's momentum and trend. Now this is important because we prefer to trade in the direction of the market's trend. We want to work and flow with the market. We don't want to fight the market. The trend is your friend. It's an old saying that traders everywhere, professional traders everywhere, commonly say. And as time goes on in this course, I will show you why that's true. But now, looking at the chart, here we want to add our first moving average. Now remember, I told you that the moving averages could be for any time period. So how do we know what time periods to choose? Well, the most common time periods used are the 10-day, the 20-day, the 50-day, and the 200-day moving averages. In many commodity markets, the traders there use the 13-day moving average, but we won't be using that one. So as I mentioned before, there are many ways to define a trend, and I've seen some really complicated ways and some really simple ways. But let's show the moving averages now so we can see how to use them. Okay, so we go up to the wrench up here, and we're going to start by going to the Add Indicator box. And up there you have moving average right at the top. We click on that, and then you see this purple or pinkish dotted line appears. Now under the number of periods you see 200. I'm going to change that to 50. And then I'm going to change the color to red. And just because, I like red because we're going to add another one with a different color later on. I don't change anything else on this page, and then I literally X out of the box. So now what you see here, this red dotted line is the 50-day simple moving average. And as I scroll over it, you can see to the left of my arrow, it says moving average 50, and it gives you the rate at where the moving average currently is at. Alright, now I want to add another moving average. So let's go add the 200-day moving average. So again, I click on the wrench, then I click on Add Indicator, then I click on Moving Average. Now here it says the number of periods, 200, which is what I want. And the color, I'm going to leave as purple or pink, whatever this color is. Then I'm going to X out of it. Now you see I have two dotted lines on the chart. The red is the 50-day, and the pink is the 200-day moving average. Again, as I scroll over either one, you'll see to the left of the arrow the level of where the moving average 200 is in pink, and you'll see where the level of the moving average 50 is in red. Okay, so that was pretty simple, right? So very easy to add the moving averages to this chart. All charting platforms have moving averages, and it's very simple to add to most platforms. All right. So now let's start with our first few rules of the day. So you see here the 50-day and the 200-day moving average. You can see that the current price of the E-mini S&P futures market is above both the 50-day and the 200-day moving average. Whenever we see this happen, we would consider the market to be in an uptrend. So, I would say that the E-mini S&P futures market is currently in an uptrend because it is above the 50-day and the 200-day moving average. So when a market is in an uptrend, we are going to prefer to trade only from the long side, meaning we're only looking to buy because we are in an uptrend. We want to see the price above both moving averages to confirm that the uptrend is strong. Okay, in this next chart, I have here the crude oil futures contract. It is a daily price chart, and here you can see that the current price of crude is below the 50-day and below the 200-day moving averages. It's below both of them. So we would say in this instance that the crude oil market is in a downtrend. And in a downtrending market, we only prefer to take trades on the short side, or that means trades that we are selling on because the trend is down. We want to see the price below both moving averages to confirm that the downtrend is strong, both the medium-term trend and the longer-term trend. Okay, what we have on this chart is the natural gas futures. Now, here you can see that the price is above the 50-day moving average, but below the 200-day moving average. So this doesn't give us a clear direction of the trend. So we would say that this market is neutral. And when a market is neutral, we want to be on the sidelines. We don't want to get long, we don't want to get short, which means we don't want to buy and we don't want to sell. We just want to stay away from this market for the moment. There are many other markets that are trending, and we'd rather ride those trends in order to make money rather than fight a market that has no clear direction. Okay, this chart is of the stock Marathon Oil Corp. And you can see here that the price action we're showing is below the 50-day moving average, but yet above the 200-day moving average. So again, we would say at this point that this market here on this time frame is in a neutral market. And at that point, I wouldn't take any trades in Marathon Oil Corp. Okay, now that we've identified the conditions for a trend and how to use the moving averages to define the trend, I recommend that you always define the trend before you enter any trade, regardless of what technique you use or what market you're about to trade. Now I say this because here's what defining the trend does for you. It helps you define your edge in the market. It also, defining the trend will help you in figuring out your position size for your trade. But I'll talk more about that later on. So the three things I want you to remember are: you want to be long in an uptrending market, you want to be short in a downtrending market, or you want to be on the sidelines or have little risk on in a neutral market. Okay, so there we quickly identified how to see which way the market really wants to go. Now, I hope you see that that was pretty simple, very powerful, and something that professional traders use every single day. Next, I'm going to show you guys how to use price and the moving averages to profit in different trends. All right, talk to you guys in the next one. Bye.